China's economy has seen exponential growth over the past 30 years. Many have wondered if there would be a shift in global economic power if the US economy would no longer be the epicenter of financial authority. But current information and research on the US and Chinese economies, as well as the world's current state, are suggesting that we are headed for a recession that could become a lot deeper than first imagined. Luckily for you, I will give you all of this research in the next 9 minutes so you can be prepared for what is potentially coming. Alright. China's economy has been the hottest finance-related topic in recent years, and this is not without reason. Looking back to the development of the country in 1978, when they decided to modernize their centrally managed planned economy, they have seen growth like no other country in the world. They now compete with the largest economy, the US. But in recent months, the growth has been stagnating, to the point where Goldman Sachs lowered its estimate to 3% compared to China's own goal of 5.5% within 2022. There are a multitude of factors for why the economic growth in China has begun to fall, but the housing market is widely considered the main reason. The $7 trillion housing market in China is on the brink of collapse. After Evergrande, one of China's largest real estate companies, missed its debt deadline in late 2021, some warning lights began to emerge. Evergrande has a staggering $300 billion in debt, but it's not the only real estate developer with a high debt level. Many of the largest developers in China have been heavily financed by debt. Their business model did work when there was a high demand for housing, but since the demand has slowed down, the debt has begun to deteriorate them. In addition, many Chinese people are dissatisfied as their apartments and properties are not finished. Meanwhile, they've already paid for the property as well as been paying the interest on their mortgage loans. What makes this really scary is that Chinese people save 70% of their savings in the real estate market. The other reason why China's growth is slowing down is the no-tolerance COVID strategy. It has had a negative impact on both the economy and the citizens' satisfaction with the government's handling of the pandemic. Some of the most affected industries are manufacturing and transportation, two central industries of modern China. Many might think that a collapse will solely disturb the Chinese market and economy, but that's not the case, and that's because of globalization. An interesting truth that shows just how globalized the world has become is the fact that 20% of everything you use day to day is manufactured in China. And many of the largest companies in the world are dependent on China, both as a market and as manufacturers. For example, Tesla gets 25% of its revenue from China, and Apple, the largest company in the world by market cap, gets 67% of its revenue from overseas. And several sources state that 20% is coming from the Chinese market. So if China's economy collapses, we will all be affected. But the reason this recession could be long-lasting and colossal is not entirely because of China. We have to look at the whole world's economic situation to get the entire picture. The world is in dire straits. The overall financial market seems to be on a downward spiral driven by high inflation, interest rates, and uncertainty as there's a war in Europe. First thing first, the inflation and interest rate. The current inflation rate can be attributed to many different elements, and a lot of them are a result of the pandemic. The FED has increased the interest rates at a higher pace than expected. Raising the interest rate slows down the economy and counteracts inflation. High interest rates make it more expensive for both people and businesses to borrow money. Think of the FED as the driver of a fancy new car with only one pedal. The pedal is both gas and brake. The pedal is the equivalent of the interest rate. You can think of the car as the economy, and the speed is representing how well the economy is going. Too high inflation will lead to an economic disaster, but too low interest rates will have the same outcome. In addition to the inflation and interest rate, there's the European war between Russia and Ukraine. This has had many ripple effects, like the power supply shortage, oil and gas prices have gone through the roof, and since Russia and Ukraine combined supply 12% of all traded calories in the world, the food price has also increased dramatically. Larry Fink, the CEO of BlackRock, the largest asset management firm in the world, said earlier this year that he is more worried about the food prices than the petrol prices. What does all of this mean? Are we headed for a recession? Will it be worse than the one in 2008? And most importantly, what should you do if a recession hits? Before we talk about how this could affect you, let's talk about an issue we're facing. It's well known that China utilizes bots online to dislike and downvote content that is critical of the CCP. Besides giving us support via likes, you clicking that button also helps us fight to get on top of the algorithm. Thanks so much. Well, first of all, it is too difficult to predict a recession. However, I would say considering the uncertainty today that it is more likely now compared to a few years ago. Jeremy Graham, well known for his incredibly precise predictions of early recessions, has also stated that a 2022-2023 recession is highly likely. But the reason this could be a long-lasting economic downhill, 2008 on steroids if you will, is because the FED may hold back on the gas pedal and will probably not rush to reverse the downturn, as the inflation has not seen numbers quite like this since the 80s. Going back to the history of China's economy and its exponential growth, it is important to remember that fast growth is difficult to maintain, and it can often lead to an even steeper and faster downhill if history is to repeat itself. If China's economy collapses, it will be the first domino brick to fall, resulting in a recession. Thus, I think that it's important to prepare for the worst and hope for the best. Remember, if a recession hits, it will be an opportunity of a lifetime to build your wealth. This begs the question, what should you do in a recession? As Warren Buffett says, be greedy when others are fearful and fearful when others are greedy. One parameter that suggests that investing now and during downturns could be lucrative is the Consumer Confidence Index. Looking at the historical data on the CCI now would be a prime time to invest. If you choose to invest now or wait for the uncertainty to be more certain, you have to be careful which stocks you pick. Picking stocks on sale does not guarantee a reward, but I have made a helpful tool for you as an investor, and best of all, it's free. Check it out down in the description below. If you want to know what to invest during high inflation and recession, check out this video. Thanks for watching. See you next time.